It's time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello everyone and welcome to the Property Podcast. It's episode 106. Thank you for joining us again. I am Rob B. Again, with me is Rob D. Who else would it be? Good morning, Rob. How are you?
Morning, Rob. I am very well indeed, thank you. This morning, or whatever time of day it happens to be when you're listening, we're going to be talking about crowdfunding. Is it the future of property investment? You'll be finding out in the next 20 minutes or so, as well as our news story and our resource of the week, of course. But first, we're a little bit behind because of when we're recording this, but we need to talk about the summit and the meetup, Rob, because that was just the other day for us, and what a exhausting but fantastic day that was.
It was so good. I really enjoyed both, and thank you to everyone who came to the summit. I really enjoyed the day. I can hand on heart I did, and I learned from it as well. I know you're the same, Rob. So that's fantastic. You know, we were given a lot of information, a lot of feedback, but there was some switched on. Well, actually, the majority, everyone there, just everyone's contributing different things. There were people there who thought they didn't have much experience, but actually, while they hadn't much experience in the size of the portfolio, what they'd done or researched added a lot as well. And then you had people who'd done loads. So it was a great mix of people. They all got on really well, which was fantastic. And then it was great to carry that on into the summit, which I'm so glad we restricted tickets to. I know, sorry for people who couldn't get them. However, it just makes that venue, which could be a little cozy, better and more bearable. So thank you to everyone who came along to that. For the next meetup, we promise, I should say, that we will find a bigger venue. And we've got a short list already, and some of them are looking pretty nice. So we'll get that arranged, we'll get that sorted. Brilliant summit, brilliant meetup. Lovely to meet lots and lots of people. Didn't want to talk when I got home. My wife thinks I'm a mute and don't talk much. But for those who are on the day, they know that's not the case. So thank you so much to everyone who came. And Rob, if that wasn't enough, I think we had a mini launch last week. Was there something else that went on?
Well, yeah, it was at the summit where it was actually a few days before we announced the magazine that we talked about on the podcast last week. And that was quite a scary moment because that was the first time we've actually talked to anyone about it. And I was worried that we were going to get lots of kind of blank stares and what you're doing that for. But everyone was very keen. And indeed, since we announced the magazine on the podcast last week, we've had a lot of people subscribing, which is a relief and which makes me really excited because it is going to be fantastic. There's still time to subscribe to the magazine. The first issue is going to be out at the start of May. We won't spend ages going on about it again now, but if you go over to thepropertyhub.net/magazine, lots of information there and you can sign up as well. If you're interested in property, which clearly you are, then £20 a year for 4 issues with all the most in-depth, up-to-the-minute stuff written by the best property journalists in the UK, it's not a bad deal. I said I wasn't going to go on about it, so that's all I'm going to say. So Rob, lead us into the news story.
Just to add though, £20, come on, you'd be mad not to do it. You'd be bonkers. Right, news story. We've had the budget. And it was an interesting one. It looked like a strong budget on the face of it, and we'll do more in detail. I'm going to make a commitment that this week, while the Property Podcast went out, Property News Radio went out as well. So I haven't recorded it yet, so this now makes me do it, with a budget special. I'm going to look at it in more detail. So it's a bit more time sensitive. So there will be, if you go to Property News Radio, there'll be a new podcast in that feed. It doesn't mean that it's back on weekly yet, but I will do a one-off special on the budget. But one of the highlights, certainly, was the new ISA. Now, we talked about this, Rob, in last week's episode on how to solve the housing crisis. Now, the article we discussed last week was from Motivator, and Motivator suggested that there should be some special savings scheme for first-time buyers. And it seems like the government listened to him, or her. I don't know if Motivator's a man or a lady, but they listened to Motivator, and they've released news of a new ISA for first-time buyers. And on the face of it, for first-time buyers, it's fabulous news. It's basically free money to help you save up for your first deposit. We'll link to it in the show notes as a guide from the BBC on exactly what it is, when it starts, and so on. But essentially, if you put £12,000 into an ISA over time, the government will give you £3,000 for nothing. you can't really argue with that. It's very, very good if you're a first-time buyer. Now, more government stimulus for the housing market, is that a good thing? Well, that's a bigger conversation. But for first-time buyers, it's certainly good news. What disturbed me in the budget is the lack of interest in solving the housing crisis, something we discussed last week. Making more people buy isn't solving the housing crisis. So if you're interested in this housing crisis, you must listen to last week's episode because we covered it in detail. And actually, if you're a property investor, if you don't understand the housing crisis, you shouldn't be investing because that's what stimulates property prices over time. So make sure you go and listen to last week's episode if you haven't already.
All right, but for now, let's get moving on to our main topic this week, which is crowdfunding, the future of property investment, with a question mark, which I hope you heard in my voice there, because we're not saying it is the future of property investment. We're going to be finding out whether it is or not. So this is a topic there's been quite a bit of interest in. We mentioned it in our news story on the show a couple of weeks ago. There's been a thread in the Property Hub about it. It came up at the summit as well. Something that a lot of people are talking about, but where there's not a huge amount of knowledge about what it is or what the upsides and the downsides are. So that is exactly what we're going to cover for you now, to tell you what crowdfunding is and whether it's something that you might be interested in getting involved in. Let's get started, shall we, Rob? What is crowdfunding?
It's a good question because it's, for most people, they'll be like, what? Crowdfunding, it's a way of raising money, small amounts of money from lots of individuals instead of a rich few ones. So it's basically a way of launching big projects. So to give you examples, you may have heard in the media of Kickstarter. So that's launching products. So if you go to Kickstarter and have a look, you'll see that there's products on there that people want to launch and they're looking for funding to get that going. And lots of people contribute until they've got the full amount and then they can launch that product. Funding Circle is another one as well. Funding Circle is a bit more corporate. It's for companies that want to launch. So there's different crowdfunding websites for different sectors, and they've started to pop up for property as well. And that's what makes this interesting. Is it a good concept? Now we understand crowdfunding and what it is. How does it exactly work?
Well, that's an interesting question because you can obviously see how it applies to something like Kickstarter. So someone wants to make a product. Basically, it's like pre-orders. So you've got an idea for a product. You say to people, here's what I want to do. Do you want to effectively pre-order it? People say yes, you get the money, you make the product. Easy. How do you apply this to property? It seems a bit of a stretch. Well, it works like this. Basically, there are several different competing platforms which offer crowdfunding for property. And whoever is behind that platform identifies properties to buy, which they consider to be good deals. So they go out and find the opportunities. Then, as a user, you can go onto the website, you can see what's on offer. So you can pick a particular property that's on offer. So it's a bit like looking at Rightmove. You can just go on there, you can look at the properties, you can see the investment case and what they're expecting and why they think it's a good idea. And you can choose how much to invest in that property. The minimum, I believe, is normally around £5,000. So obviously that's not pocket change, but it's a lot less than you'd need to actually buy a whole property on your own. Other people are obviously doing the same thing. And so at some point, the full price of the property is raised and a special company is created to own the property. So you and everyone else who's put money into it become shareholders in this new company that's set up specifically for this one property. From then on, and here's the appeal to the whole thing, the crowdfunding platform takes care of everything and makes all the decisions. So whereas as a property owner, you'd normally be making decisions about tenants and maintenance and all the rest of it, the crowdfunding platform does everything. And then you, as the investor, get paid a share of the rental income and also a share of the capital value increase when the property is sold. So at some point, all the people who own a share of the property will take a vote as to whether to sell or not. If the property is sold, you get a share of the upside. So I touched on the benefits there, but Rob, what are the advantages of crowdfunding as opposed to any other type of investment?
Okay, so the big one, the obvious one, is you can get involved in property with less money. Lots of people contact us through email, the hub, they call into the office at RMP. All ways you can contact us. People ask, I'm trying to save, I haven't got much, how can I get started? And often the answer is, well, get 20 grand plus together and get going that way, which for some people, it's just going to take a long time. So what this does is it opens the door up to people with smaller amounts of money, and then they can get involved. So as Rob said, 5k. Also, one that you may not think of is you're diversifying more. So let's say you do get that 20 grand that we just talked about. Now you can go and get one property, or you could split it into 4. So you could go, okay, I've got that 20 grand now. Instead of buying one, I'm going to put it into 4. So you're diversifying. Your risk on paper looks like it's being reduced. So there are definite advantages to crowdfunding, and you can see why it's on paper a popular concept. But of course, there are disadvantages, like with anything, any form of investment, any form of way of making money. While there may be upsides, there are always going to be downsides or disadvantages. So what are they?
Well, strap yourself in because there are a fair few. The common theme that they all have is about control. So obviously, if you're buying a property yourself, if it's a freehold property, you've got ultimate control over what happens to it. If you're buying a leasehold property, yes, there's the leaseholder, there's a management company, but you still get to make the lion's share of the decisions. The difference with crowdfunding is you are just one owner among many, and control of what happens is given over to the platform. That means that you don't have any control of costs, and you don't know if the property is being properly managed. That's an advantage, as Rob's just said, because it means you don't have to worry about that stuff. But then there's also a downside as well if it's not being done properly. You've also got to bear in mind that as opposed to owning a property yourself, the platform's taking their cut. So if they're doing all the work, of course, they want to be compensated for it. So that means that the rental income is going to be shared out between all the owners, but the platforms normally takes a cut as well. And when the property goes up in value and is sold, that profit is shared out between all the owners, but then the platform takes a cut as well. So the returns won't be as good as if you just bought the whole property yourself. But maybe that's fair enough because you didn't buy the whole property yourself, and this gave you an opportunity that wouldn't have otherwise been there. Another thing relating to control is about the exit and about liquidity. So you don't have any control over when the property is sold or not. So as I said, normally a vote is taken about whether to sell or not. So if you think you should be selling the property because we're coming up towards the winner's curse of the property cycle, you've been reading your Fred Harrison, but everyone else votes to keep it, there's nothing you can do about that. And if you want to get out of the investment early, there's a liquidity problem as well. Because again, if you owned a house completely on your own, if you needed to sell it, if you had to, you could sell it next week. You wouldn't get full price for it, but it could be done. But with crowdfunding, you're relying on there being some kind of secondary market for your share of the property, which may or may not be there. So there are disadvantages. Obviously, if it all goes wrong and the whole thing is mismanaged and it's a disaster, you do have security. You do have the property. And unless the property is an absolute dog, then the property can be sold and everyone can get their money back. But of course, with the multiple people involved, it could actually take years to get paid out. But that security is there. So there are some clear advantages. You can get into property investment with much less money and you have to do much less work. But then there are disadvantages as well to balance it out.
There are. So really, in conclusion, what do you need to take from this? The main thing is this is very new. Crowdfunding in general is a new concept. It's only been around for a few years. And property crowdfunding is an even newer concept. So at the moment, what's going to happen? There's a lot of unknowns, and I think it's for the brave at the moment until the concept is proven a little more and people know that the returns are solid, the companies are reputable, and they can do business with them. It's really difficult to know which platforms you can and can't trust. I know I might give the impression sometimes that I like risk, but actually it's not the case. I'd like to manage my risk and actually lower it as much as I can. And crowdfunding for me, at the moment, although you could argue is lower risk than normal property investment, actually, because it's such a new concept and it's yet to be proven over the long term, for me, that just makes me nervous. The other thing to bring up is there are alternatives to this as well. And there are residential property funds that you can look at, which offer more diversification and liquidity. So it's not like crowdfunding is the only option if your sums to invest are smaller. There are funds available where you can invest too. And you can argue against why crowdfunding is better versus funds and so on. However, it's not like it's crowdfunding or nothing. There are more established, proven funds out there which can offer a similar, although not the same, type of investment. So crowdfunding, rule it out? No. For me, it's one to watch. So crowdfunding could be a fantastic product and system in the future for property investors or for people who want to get started in property. But as of just now, I'd like to wait and see personally.
Yeah, and the other thing that will be interesting to wait and see is which platforms emerge as being the ones who really know what they're doing. Because it's quite new, it's quite trendy, it's quite easy for just anyone to throw up a website and start doing it. But I think a lot of the success or otherwise of this will come down to how good that particular company is at finding the right investment in the first place and then managing it effectively. And there are some people out there who are fantastic at that kind of thing, who you definitely want to be in business with when it comes to property. And there are others who probably have very little experience and just want to get into it because it's the new cool thing. So over time, it will emerge who does a good job and who does less of one. It doesn't mean that those disadvantages are ruled out, because there's always going to be a lack of control compared to doing it all yourself. But the landscape will become a lot clearer. At the moment, it feels like it's taking, for me, a little bit of a punt over who to trust. But that is crowdfunding in a nutshell. Is it the future of property investment? Well, I think it is appealing if you're a long way away from being able to afford a deposit on your own. But the jury's out as to whether it's something that you'd want to do or not. You'd definitely be, as Rob said, a pioneer, possibly a brave one, if you do. But for everything we've talked about in this topic, you can go to the show notes, which are at propertyhub.net/crowdfunding.
So it's time for our resource of the week now. And the resource of the week handily comes from somebody who was at the summit, Amo. So thank you, Amo, for providing this one. So Robbie pulled you aside for this one and recommended an app. And I've not downloaded it yet, but I've looked at it and it looks really interesting. One that you can add to your research arsenal for property investment. And it's a crime map app.
Yeah, so Amo was showing me this over lunch. He just pulled out his phone and started telling me where there'd been crimes recently. I was like, oh, there was a mugging over the road the other day. Oh, and there was a shoplifting just there. This isn't that we have our events in the ghetto, by the way. It's actually a perfectly respectable part of London.
My office is round the corner.
Yeah. But he just started showing me all this stuff. And it's this app. It's this crime map app, which, as the name suggests, takes public data about where crimes have taken place and maps it out for you. So basically what it means is that it's a really easy way of having access to this data point, because when you're choosing whether to invest somewhere or not, there are loads of different data points that you're going to be wanting to look at. One of them is crime. And Amo used the example of an investment he was looking at where it was just down an alleyway from the station. So it was near the station, which is great, but there's an alleyway that you had to go down to get to the property. And he got out his app and he saw that loads and loads of crimes had happened in that area. So he's thinking, okay, tenants won't be feeling very safe taking that route. Therefore, I might have struggled to rent it out. It's a really good example of when you'll be wanting to use this data to make decisions. Obviously, you can't look at the map and go, oh, there was one burglary there. This isn't the place for me. There's going to be crime everywhere. And as we saw in the part of London where we were, not a bad part of London, but there's plenty of crime there. So you can't use it to put you off completely, but it is useful as a tool. And it's so easy to use. Definitely worth downloading and checking out.
It's free as well, so it'd be criminal if you didn't get that one.
Oh!
Right. Sorry. Moving swiftly on now to our review of the week. And this is a swift review. It's from Gruff Northerner, and it's very simple. It says, 5 stars, I keep listening, can't be too bad. Well, Gruff Northerner, if we get your seal of approval, then we must be doing a half decent job. So thank you so much for taking the time to... It probably took you longer to get into iTunes than it did to write the review. So thank you for doing that. We do appreciate it. Next week's review is a tiny bit longer. But thank you. It's 5 stars nevertheless. So thank you, Gruff Northerner.
Love that. Thank you very much. Thank you for everyone who's left us a review. That's us for this week. Next week, we've got another very topical subject. So crowdfunding is quite new and being talked about a lot at the moment. So are pension reforms. It will not have escaped your attention, I'm sure, that the pension rules are changing. Is this going to mean a massive influx of people gambling away their pensions on buy-to-lets? Well, we're going to be giving you everything you need to know about pension reforms and property next week.
We are. So until then, if you haven't already, go to thepropertyhub.net/magazine. That's thepropertyhub.net/magazine. Get your subscription to our new fabulous magazine. If you don't know what that's about, listen to last week's episode and you'll certainly know about it after that. But if you go to the link, it tells you more about what we're doing. Incredible writers we've hired for that. Some of the best in the UK. We're not going cheap. We're not going small. This will be brilliant. I promise you. But that'll keep you busy until next week's podcast, which is the pension reforms, everything you need to know. Until then, have a fantastic week and bye-bye.
Bye-bye. Thanks for listening to The Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.